What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to take a look at Bitcoin. Hope everyone enjoyed their New Year's holiday, and let's kick some ass in 2024. So starting off with some news, this is a new update on Forbes. The Bitcoin ETF could be approved as soon as this week. We did forecast the approval of a BlackRock Bitcoin ETF in the last Bitcoin episode. Obviously, people in the mainstream media are now calling for Bitcoin to blast past $50,000 because if the Bitcoin ETF does get approved, this will legitimize cryptocurrencies in the eyes of traditional investors and bring attention to other cryptocurrency and blockchain projects. One more thing I want to bring to your attention is that BlackRock has officially chosen JP Morgan and Chase to be their authorized participant for the BlackRock Bitcoin ETF. So what does this mean? This simply means that JP Morgan's primary responsibility will be to keep the BlackRock Bitcoin ETF's market price closely aligned to its net asset value. I find it a bit ironic how just a few weeks ago, Jamie Dimon, the CEO of JP Morgan and Chase, appeared in front of Congress calling for Bitcoin and all cryptocurrencies to be immediately banned. And fast forward to today, JP Morgan and Chase is directly involved with the responsibilities of managing the upcoming Bitcoin ETF. Funny how life works sometimes. Okay, the second piece of news is that Michael Saylor has once again purchased Bitcoin. Michael Saylor has purchased an additional 14,620 Bitcoin for a total of $615 million, which equates to an average buy price at around $42,100 per Bitcoin. So this most recent Bitcoin purchase means that Michael Saylor now owns a grand total of 189,150 Bitcoin, worth over $8 billion at the time of this recording. Okay, now that I filled you up with a lot of optimism and hope, let me explain why Bitcoin could be in the process of forming a very significant top. If you go back to the previous Coinbase episode, we did explain how the Bitcoin ETF could be a sell the news event where market makers manipulate retail investors into buying the top. As you can see, every time before the Bitcoin halving event, which is marked in yellow, Bitcoin has always tagged the blue 0.75 Fibonacci level. Afterwards, Bitcoin has always had a major correction to the downside. In August of 2012, Bitcoin tagged the blue 0.75 Fibonacci level before the Bitcoin halving, and Bitcoin crashed almost 50%. Fast forward to June of 2016, we can see that once again, Bitcoin tagged the blue 0.75 Fibonacci level before the Bitcoin halving, and Bitcoin crashed almost 40%. Fast forward to June of 2019, same thing. Bitcoin tagged the blue 0.75 Fibonacci level right before the Bitcoin halving, and Bitcoin crashed almost 71%. Now, fast forward to today, we can see that Bitcoin is trading right alongside the blue 0.75 Fibonacci level right before the Bitcoin halving. Now, one thing that's interesting is that in 2016, Bitcoin did overshoot the blue 0.75 Fibonacci level to a tune of 15%. So if we were to apply a 15% buffer to today's price, Bitcoin could still go to $50,000. Now, regardless if Bitcoin goes to $50,000 or not, we believe a correction to the downside is on the horizon. All of our Bitcoin price targets still remain unchanged. We still believe the best decision at the moment is to either take some profits, like we said in the last Coinbase episode, or just hold. We still believe the worst course of action at the moment is to let your emotions take control and FOMO buy into Bitcoin. Shifting gears into Tether dominance, just a quick overview. When Tether dominance goes up, Bitcoin goes down, and when Tether dominance goes down, Bitcoin goes up. As you can see, Tether dominance is already tagging our white trend-based fib extension support area and is very close to tagging the demand trend line in white. We are also very close to tagging the critical support level at 5.24% and the 200 weekly moving average in red. Because Tether dominance is so close to these cluster of support levels, we believe that the Bitcoin ETF announcement will send Tether dominance higher, thereby causing the price of Bitcoin to drop and trapping investors at the top once again. Now moving over to the daily time frame, we can see that Tether dominance is forming a daily hammer with daily bullish divergence, where the price of Tether dominance is making a series of lower lows, but the RSI is printing a series of higher lows. Like I just said, if Tether dominance pushes higher, the price of Bitcoin is going to fall. Be careful of opening leveraged long positions here. Listen, I really would suggest to lock in some profits here with all this cryptocurrency euphoria surrounding the Bitcoin ETF. Now, taking a look at the S&P 500, last video we discussed the importance of this thick, fat, pink trend line because the last time the S&P 500 tagged this thick, fat, pink trend line, the S&P 500 proceeded to make new bear market lows. Additionally, we have another Fibonacci ring, and if you're familiar with our Coinbase episodes, Fibonacci rings are often signs that volatility is on the horizon. As you can see, the last time that the S&P 500 crossed a Fibonacci ring, the S&P 500 dropped nearly 6%. So because of the thick, fat, pink trend line and the upcoming Fibonacci ring, we still maintain from the last Bitcoin episode that the S&P 500 will have a decline to start the new year. And if the S&P 500 drops to start 2024, Bitcoin will most likely drop to start 2024 as well. Okay, so that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.